It is easy to go with the flow and buy crypto, but very few know how to make the best out of investments. We will be talking about how to make the best out of investment and how to recognize signals to trade Bitcoin. Before we start, be sure to hit the subscribe button and turn on the notification bell. Welcome to Moneymaker. Moneymaker is a channel dedicated to helping others become financially independent through the FIRE movement through cryptocurrency trading and investing. In today's video, every trader wishes to buy low and sell high. But how do some people invest earlier than others and make the best out of it? This is basically because of the study of trends in the charts. When a bearish market ends, it shows certain signs in its motion in the chart. If you can analyze the chart and invest accordingly, you will be able to make the best out of every investment. We will first talk about different ways to spot the trend reversals in the market, and then we will talk about how to use these trends to trade Bitcoin.
Come on, let's go.
Capturing trending movements in a stock or any other type of asset can be a bit complicated. Yet, getting caught in a trend reversal is what most traders who invest in trending assets fear. A reversal is basically any time the trend direction of a stock or other type of asset changes. Being able to spot the potential of a reversal signs to a trader that they should consider exiting their trade when the assets no longer look favorable or enter before it is too late. Reversal signals can also be used to trigger new trades, since the reversal may cause a new trend to start. The Sushi roll reversal pattern is a period of 10 bars in which the first 5, or the inside bars, are confined within a narrow range of highs and lows, and the second 5, or the outside bars, engulf the first 5 with both higher highs and lower lows. The pattern is similar to a bearish or bullish engulfing pattern, except the fact that instead of a pattern of 2 single candles, it is composed of multiple candles.
Well, there it was.
When the Sushi roll pattern appears in a downtrend, it warns of a potential trend reversal, showing an opportunity to buy or sell a short position. If the Sushi roll pattern occurs during an uptrend, the trader could sell a long position or potentially enter a short position. While the number 5 or 10 bar patterns is given, neither the number nor the duration of bars is set in stone. The trick is to spot a pattern consisting of the number of both inside and outside bars that are the best fit, given the chosen asset, and using a time frame that matches the total desired time in the trade. Another trend reversal pattern recommended for the longer-term trader is called the outside reversal week. It is very similar to a Sushi roll pattern, except that it uses daily data starting on a Monday and ending on a Friday. The pattern takes a total of 10 days and occurs when a 5-day trading inside 1 week is suddenly followed by an outside or engulfing week with a higher high and lower low. Interesting, isn't it?
No, but his knowledge of this is on a whole other level.
But when it comes to Bitcoin trading, there is another pattern that we have to look out for. This is the inverse head and shoulders pattern. But first, let us look at the head and shoulders pattern. On the technical analysis chart, the head and shoulders pattern occurs when a market trend is in the process of reversing either from a bullish or bearish trend. Head and shoulders pattern includes a left shoulder, a head, and a right shoulder and a line drawn called the neckline. The left shoulder is formed at the end of an extensive move during which volume is noticeably high. After the peak of the left shoulder is formed, there is a subsequent reaction and prices slide somewhat low, generally happening on low volume. The prices rise up to form the head with normal or heavy volume, and subsequent movement downward is accompanied with lesser volume. The right shoulder is formed when prices rise up again but remain below the central peak, which is the head, and fall down nearly equal to the first trough between the left shoulder and the head, or at least below the peak of the left shoulder.
I can't get my money.
The volume is generally lesser in the right shoulder formation compared to the left shoulder and the head formation. The line called a neckline can be drawn across the bottoms of the left shoulder, the head, and the right shoulder. When prices break through this neckline and keep on falling after forming the right shoulder, it is the final confirmation of the completion of the head and shoulders top formation. It is also possible that prices pull back to touch the neckline before continuing their declining trend. Coming to bottom head and shoulders formation, this formation is simply called the inverse of a head and shoulders top and often indicates a change in the trend and market sentiment, and that is what we check for in the Bitcoin chart. The pattern is upside down and the volume pattern is different from a head and shoulders top. The prices then move up from the first low with increased volume up to a level to complete the left shoulder formation and then fall down to a new low. A recovery move follows that, which is marked by somewhat more volume than seen before to finish the head formation. A corrective reaction on low volume forms to start the formation of the right shoulder, and then a sharp move upwards due to increased volume again breaks through the neckline. Another difference between the head and shoulders and top and bottom is that the top formations are completed in a couple of weeks, whereas a major bottom generally takes longer and, as seen in many cases, may be prolonged for a period of several months or sometimes even more than a year. The neckline drawn on the formation represents a support level. It cannot be assumed that a head and shoulder formation is entirely completed unless the support level is broken. Such breakthroughs can happen to be on greater volume or may not. Breakthroughs should be analyzed with great care. Serious and impactful falls can occur if a breakthrough is more than 3 to 4%. When an asset drifts through the neckline on small volume, there can also be a movement upwards in some cases, although it has been observed that such a rally normally will not cross the general level of the neckline before selling pressure increases and a steep decline takes place, after which prices may due to greater volume. If we look closely at the chart, Bitcoin has been moving in a downward trend since forming a local top at $13,970 on June 26, 2019. The buyers stepped up and arrested the decline in the $7,000 to $6,500 support zone, forming the left shoulder of the inverse head and shoulder pattern. This led to the beginning of a relief rally that pushed the price of BTC to $10,450. At this price level, short-term bulls got profits and bears initiated short positions, aiming to continue the downtrend. Later, widespread selling broke the support at $6,500, and the Bitcoin Tether pair went down to $3,782.13 on March 13, 2020. The bulls saw this fall as a buying opportunity, and that again started a strong relief rally, which reached close to $10,450. This second trough formation formed the head of the pattern. The right shoulder was comparatively shallow because the selling pressure was lessened and bulls did not wait for a deeper correction to buy. Then, the bulls pushed the price above the neckline on the 27th of July, completing the inverse head and shoulders pattern formation. Later, the bears tried to engulf the bulls and they pushed the price back to the neckline. Even though the price went just below the neckline, traders did not allow the pair to stay below $10,000. This put forward a change in sentiment. Then on, the bullish momentum picked up as buyers pushed the price above $12,500. To find the minimum target objective of the inverse head and shoulder pattern, you will need to calculate the depth from the neckline to the lowest point, forming the head. For example, let's say that the neckline is around $10,450. The breakout is around $10,550, and the lowest point is at $3,782.13. Subtracting the lowest point gives a depth of $6,667.87. This value is then added to the breakout level, which is near $10,550. This indicates a target objective at $17,217.87. When a trend changes from down to up, it may fall less than or exceed the target objective. And this is why traders should use the target as a guide and not dump their positions just because the level has been attained. With that being said, it is important to know that all investments come with risks, and it is important to do your research before making any financial decisions. It is also good to consult a financial advisor, as we do not provide financial advice, as the video is for entertainment purposes. If you enjoyed the video, subscribe to my channel for more updates and support by adding comments and hitting the like button. See you again with another video. Until then, bye.